Yeah, David, when the wind chill gets below 55 here in Hawaii, we're freezing our butts off. Okay, that looks good. Looks good. Yeah, my sympathy. Yeah, I know. I don't get much sympathy about our wind chill over here in Hawaii. I just can't understand it. Okay. Okay, David, I. Okay. Okay, I'm gonna go ahead and push the go button here. Okay, good afternoon, everybody. First, I just want to let you know that all the materials we do present are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance. So I will say, Anil, good morning.
Good morning. How are you?
I'm doing well and really glad to be back. And we'll get back to our regular schedule now. I don't have any more trips planned for quite a while. I've got three people over on the YouTube channel. Aloha, good morning over there. If you have any questions, please leave a comment over there. And also, if you will, if you're not subscribed to the YouTube channel, make sure you subscribe and hit that share button and just share the content that we put out on a regular basis. So, Neil, well, one, this young man is sitting there, beautiful view, but he's got a lot of concerns on his mind. And maybe you're feeling, everybody may be feeling the squeeze that goes along with a mixed market signals like we're currently getting. Today the small caps are down. They're holding support, but they're definitely the weakest link. And how's that going to impact your portfolio? So, welcome to everybody to Trade Your Way to Freedom live stream, where we basically focus on clarity in the ever turbulent sea of stock picking and stock market. You're going to want to hang in there for today's session because I am going to do a 2 minute, and you can time me, 2 minute review of the Magnificent Seven stocks. This is kind of a surprise, a 2 minute review of the Magnificent Seven stocks to determine whether or not the Magnificent Seven stocks need to be cut back down to the Fab Five, as IBD says. And the other thing we're looking at is the jobs market today that triggered and pushed the market. The NASDAQ's reacting well, small caps reacting poorly. Why? The underlying hinge-pin to this whole thing happens to be what's the effect it'll be on the Fed. Everybody is looking towards that Fed, wanting the Fed to cut rates. Saw a really great presentation by Stock Charts a little bit earlier this week. Amazing. One of the analysts was pointing out that, did you know, and Neil, maybe you know this. Have you ever looked back in history? When the Fed started cutting rates, oftentimes led the market into a recession and a drop in the market. Did you realize that?
I know about dropping. I was not aware that it led into recession, but might have happened.
Yeah,
Sure.
it's like 8 of the last 11 times when the market when they basically started easing off on the rates, that's what it led to. Will it happen again? We don't know. Every time is different. However, as I said, we're going to take a look at the Mag 7 a little bit later, and here is the performance of the Mag 7. As you can see, If you haven't seen it yet, I've got a video over on the YouTube channel about Tesla where I forecast exactly where I think it's going to fall. And it's hitting it. If it breaks the 180 level, folks, it will go on down and hit my next level down, which is going to be a shock. And some people just don't believe how low Tesla could go. So with that, let's go ahead and jump over and start looking at the stocks. Now let's look at the indexes and see what's going on with them. And here's the S&P, the spiders. As we look, we see a uptrending line taken off here. However, it's working inside a uptrending channel. On the weekly chart and the daily chart, it has basically broken out from that. At the same time, our momentum indicators that we see here are showing some negative divergence here and not quite here. It's still breaking out to a new high. That's positive. And at the same time, on the market forecast, negative divergence. And while that doesn't immediately lead to a fall and a fail in the markets, it can have an effect of basically piling on so that over time, that can be the inertia that pulls the market down. At this particular point, I am not looking to short the market. We don't have enough information about that. Am I leery about the market? Not really, because there has been times in the past, like back in 2004, when the S&P went on a tear and just it would pull back 3 or 4 days and 5 days and then break out. Pull back 3 or 4 or 5 days, then break out. And it would move higher and higher. And that was kind of a super trend that the indexes were on. So on the spiders, what am I looking at? Just continue to ride the wave heading up, wait for the pullbacks. And as long as, especially if you are a trader who watches the market forecast on the weekly chart, as long as the market forecast stays above this 80 line right here, continue to trade the pullbacks to the upside. So that's one. Excuse me. The next one I want to focus on is the Russell. And you'll see the Russell is. Okay, the good side about the Russell is that it's, as represented by the IWM, the good side about the Russell is it is holding above the 50-day moving average. Nice hammer on day before yesterday. So do we want to get long the, let me activate that and stretch that on up, back up to there. There we go. Because that's what it has to break out. That's kind of the defined downtrend. So the 50-day moving average is a strong level of support. Will it hold there and continue to push its way higher? Again, the small caps are so interdependent upon a reduction in rate by the Fed that it may just continue to drive sideways. We'll see. We'll wait and see what happens with that. As you note on these are very important aspects, as we see over here. The TSI on the weekly chart is still facing down. So let's be patient until we get a reversal. The TSI on the daily charts also reversed off a level of resistance and is dropping back down. Could we stop right here and rally back up? Sure could. I would be interested in IWM down here towards the midsection of the candlestick, the hammer candlestick, because that was a hammer and a bullish harami right in there, which is a nice strong reversal signal. So what's the number on that? Let me give you a number. If I get back down to about 192, 193, that would be an opportunity. What am I looking at on TNA? Because that's what I would actually be trading. Similar type situation. If I get back down to about 34.30, that may be a trigger to go ahead and get onto a trade if that level holds. We're really close to that's where your stop out would be. And so the risk on that is is actually quite small. And last but not least now again, we're going to get back into our stocks here shortly after Anil and I talk a little bit about a really great subject. Qs, the NASDAQ. NASDAQ has come down, hit the 20-day moving average and rebound very nicely. How high is it going to go from here? We don't know. At the same time, what are some of the characteristics of this particular uptrend now? One, negative divergence on the TSI as we're going up what appears to be starting to make new highs. Negative divergence on the weeklies over here. Negative divergence on the other momentum indicator. If you look at the RSI, you will probably also notice negative divergence on the Qs. So what does that mean? Does that mean we're going to just, fall out of the sky? No, it doesn't. We have to see a pattern, a candlestick reversal pattern or something like that. And it has to show that it's stalling out. And then do we trade the first move down? Probably not. We are going to be talking about how to determine when we have a top that we can trade on this month's session with the premium members, or our premium training session, because I think it's very important to know how to wait and be patient for the trades in the proper direction. And so that's what we'll be working on this month. So Neil, that's what I've got with the indexes. The Qs, yeah, I like the Qs or TQQ, but right now, maybe after a breakout, or you could trade it directly off a pullback off the 20-day moving average. That's what I'd be looking at. What's your thoughts?
Right now on indices of my triple screen system, the signals came in November and they're still intact, except of course in IWM.
Okay.
Gave up for a while, but it's back on the uptrend beginning 26 signal. So we will see how it goes. But overall, generally, it's looking very good.
Okay, how close is the Russell to? I mean, is the Russell just looking absolutely ugly and not on the daily chart and not and weekly chart showing that it's like? In other words, what I'm trying to ask is, it look like it's leaning towards getting a triple screen signal back up to the upside?
Let me just look at the Russell.
Okay.
Just looking. Actually, the weekly signal is, the daily signal just came back, but I don't know how long it's going to hold.
Okay.
It came the 29th and now it has pulled back, but looks good.
Okay. And so, yeah, and I'm going to be continuing to watch that. The other thing that I'll be covering this month is also the secrets of how to let your winners run. I mean, specifically tying into the weekly chart, because I know there's a lot of folks who would like to break off part of the funds in their portfolio so that they could let that piece grow separately than the active or the shorter term swing trading. And we're going to show to you how to do, we're going to call it long-term swing trading or something like that, but to show how to evaluate the charts so that you can get on one of those runners that'll run 50, 60, 70, 100+% without getting shaken out of it. So that's going to be a lot of fun. So here's where we're sitting.
Weekly triple screen signal does an excellent job to answer that question.
Okay. So
combined weekly and daily, it's real good information.
Yeah, those weekly signals are very powerful. And I think one of the reasons a lot of folks don't focus on them as much as they potentially should is it takes a lot of patience.
Yeah.
To wait 5 days for a new signal, or wait sometimes 3 and 4 weeks But the secret in waiting that makes it so important is that they usually lead to more powerful moves and longer and bigger moves. And so if you want to put money in your pocket, that's a great thing to be waiting for. So here's where we're sitting as of about 9 o'clock this morning. As you see, really nice rebound after the couple of day pullback. And I'm really pleased. Currently, we're up about almost 7%, and we're beating all the indexes for sure. And we measure ourselves against the, and if you're interested in finding out what the heck we're doing with autopilot trading, I will put a link in the description on how you can become an autopilot trader. So with this, Anil, I'm going to stop sharing. I'm going to show us side by side, I think. Maybe. There we go. There's the two of us. And then the question for today is, we're going to take on the question of what is the holy grail of trading and why do so many fail? Because they keep searching for it. So Anil, would you like to, you said you looked up holy grail.
Yeah, I was kind of curious, so I looked up, and basically, in a nutshell, what it says is a strategy or a system that profitable all the time with no losses and is consistent. And,
So I'm not sure those two things go together, man.
yeah, but that's what it said.
Okay. So why do you think people, again, why do you think people, what is the Holy Grail? And then why do you think people keep looking for it? And why do you think people keep failing? Because they keep looking for it.
Because I think it looks so simple when you kind of sit back and look at it. Oh, I got to buy low and sell high.
Okay.
Let's do it.
Okay.
But then when they get into it, there are so many other variables that are involved, and it's question of mass psychology.
Mm.
Unless you get into tune with that, it creates problems. And I think Wyckoff does a pretty good job with the description of his composite man and everything, trying to explain. And so it's difficult to get in tune, and that's the reason I think many of us fail, including me. I failed several times.
Yeah. And it's always like it's a continuous search. Just by show of hands, or just put a Y in the comment section if you've ever been caught in the trap of searching for the Holy Grail. Have you? We'll wait for your response. Fran, no. Okay, cool. How about anybody else? Anybody on the YouTube channel? So one of the things, Anil, that really has been driven home to me is that I think that the search for the Holy Grail has to do with a hunger, almost an addiction for additional knowledge. That, well, if I just know more, I'll automatically be able to trade better, which is basically not true, because gaining knowledge is a fairly easy task. And so everybody can continue to gorge themselves on the knowledge of how to trade and read all the books and all that kind of stuff. However, when the rubber meets the road, they basically are unable to do it. Why? Because they don't have a mechanism to apply the knowledge. In other words, they don't learn how to practice their trading. They don't know how to, do back testing on their trading. So I've had numerous people drop out of the system and drop out of our service and tell me that, well, I've learned a lot from you, but I just got to go learn more because I'm just not sure that what I'm doing. And so they miss the point of, one of the things I would like to encourage them to do if you're stumbling looking for the Holy Grail is learn just enough to start being profitable. You don't need to know 110% about the system or the interworkings and all the nuances. Learn enough to become profitable and then focus on that. It reminds me of a story have you ever seen that demonstration by Stephen Covey, Neil, where he comes out with a bucket full of like sand and sands and all that
Yes.
kind of stuff, and it's really close to the top, and another bucket that's totally empty. And he calls this person up from the audience. The person comes up and says, you know, here's your bucket, and it's full of all the distractions in life, or the small. They're important, but they're not critical. Here's your critical, and hands a bunch of rocks that are the real critical things, the big things to get in. Says, okay, put them in the bucket, but you can't go over the top of the lid. And so the person tries to squeeze and push these rocks down into it could be job, it could be family, it could be, a lot of different, very, very, very important things. And they find out they can't get it in because of the small crap they've been focusing on. Until he says, well, there's another way. Let's take the big rocks and put them in the other bucket, which they do. And they get all the big rocks in the other bucket. And then they pour the rest of it, the noise, the nuances, and it all filters down around it. And they fill up the bucket totally to the top, but don't go over the top. And so I think part of the thing, if you're having trouble focusing on getting to the Holy Grail, identify your big rocks. Identify your big rocks and focus on those. In autopilot trade, we have 6 big rocks. What to trade, when and where to enter, when and where to exit, what strategy we're going to use, what we expect, and then finally have a mentor. Those are the 6 big rocks to focus on. So I hope you enjoyed that. Anil, so sorry, I didn't mean to get going so much, but I just did.
Was good.
So have you ever thought about that though? Just focus, and I know you have, maybe you haven't defined it as big rocks, but of focus on just the important few.
Yeah, I think in there I go back on the mindset and the psychology part that's overlooked. Even after you have your strategies and rocks in place, if the psychology mindset part is not used, you get into problem.
Yeah.
And specifically, that deals with taking action when action is needed.
Yeah. And that's what part of the other things that drove it home to me is that concept of applying, applying the knowledge, which is partly the mindset, but also the physicality of that. And so I think that's why people move on, because guess what? Applying the knowledge is where the real hard work comes from, but has the biggest reward. So no more on that. We'll bust along over to the next session. And let me share my screen again. If I can find my screen to share. Good session, Anil. That was.
Thank you. Good topic.
Okay. So let's go ahead and see what kind of stocks we're looking at going into this month. And remember, 1 minute at the end, well, towards the end, I'll be covering the 2 minutes at the end. I'll be covering the Magnificent Seven. So our first stock for the day happens to be PATH. Anil?
Yeah, it's strong stocks, very strong fundamentals.
Okay.
Accumulation distribution A minus, comp 99, up down is 1.6. And gave a signal recently on my system. So I like it.
So are you buying it right now?
I'm looking for a slight pullback. It has pulled back since it did a big breakout.
Yeah.
So I might wait later on till today or try to get in. I need to decide, but I'm pretty close.
That looks darn good. That is basically looking really good. And, I really like that one. It's close on a nice formation here where you gapped up, came back into the middle of the gap. Guys, this is one of those stocks you learn from, is notice how the middle of the gap tends to be a huge level of support, strong level of support. It's doing it right now, and it's popping off of there. And I agree with Anil. I wouldn't want to identify a level much lower than today's low, but maybe midsection of the candle so it can ram up above the 8 and the 20. Or if I get an 8 close above the 820, Anil, I'd be looking at jumping all over this.
Yeah, looks good.
So I like it. Okay. My stock for today is one that, full disclosure, the autopilot trading service has been trading for quite some time. We are actually in this trade from all the way back down here last year, but I think it's time to expand and get into it again. Continues to be a highly rated stock with an let's see, up down rate accumulation distribution of a B plus, 99 on the comp, up down ratio of 1.8. It appears as if we are approaching this high over here. Swap over to the, to the monthly chart. And as you see, we've got a long way, well, another couple $100 to get up to the, no, not quite a couple hundred, a little bit over $125 to get back up to the past high here. So it is heading in the right direction. The monthly chart, as you can see, we had a crossover several months ago, and it's continuing to push higher. And then on the weekly chart, this is what I want to look at for the longer term hold. And as you see, the momentum of the market forecast, the intermediate line, the green line is up and just continues to just stay up there. And when you get a stock that is a runner, that's oftentimes what happens. I would look at a pullback in between the 8 and the 20. Let's say about 137.10 is where I'd look at getting into ZS with a stop just slightly below the uptrend line, which is about, and I'll give you a number on that, which is a little bit over 4% away. So that's well within the parameters of my trading system. So that's that. Now this one I'm not familiar with. Oh, I'm sorry, Anil, go ahead.
Price level you said is what, 237 or something you said?
Yeah, I would give it, I would put an alert at, let's say 240, and I'd be looking to enter somewhere about 238.
Gotcha.
And then your APPF, I'm not familiar with this.
Again, it's a software company. I don't know the details. It just popped up on my screen, and it is a big jump. Earning is out of the way. So now I'm looking for a slight pullback and might get in there.
Okay. I really like that. We got our breakout. So that looks, any pullback towards, and doesn't have to get all the way back down to the breakout area of about 212. That looks good. A little bit light on the volume though, Anil?
Yeah.
Okay. So are you okay with that?
Yeah, I'm okay because the fundamentals are so strong and the story is strong. So,
okay. Excellent. Well, folks, let's see. I didn't miss the boat, but that's not what I wanted. There we go. SOXL, really nice pullback into the uptrend line. And we're starting to break out back above the 8 and the 20. This is your leverage ETF pick for the week, folks. And so I'm looking at, if I bought it now, I'm about 8% away from the swing low. When I face a situation like that, If I did want to buy immediately, I would only buy a portion of a position, whereas if it dropped, went against me and swung below this swing low right here, I would never lose more than I would with a full position. So, but however, what I'll be looking on this one is probably a pullback back to about, yeah, $33 or so is what I would be looking at for a potential trade on that. It looks really good. Looks like the momentum is starting to shift up from down here off of the 50, off of the zero line, and also shifting on the market forecast. So I really like that one. What's your thoughts on SOXL?
No, it's looking good.
Okay. So
Good.
there's 4 great picks, folks. I mean, this market is just going absolutely phenomenally. So hey, just a reminder, the keys to success in the market is to have a plan and stick to it. One of the ways I established my plan was we wrote this book called The Trade Your Way to Freedom. It's a bestseller over on the Amazon. I will put a link down in the description on how you can get hold of this book. Again, those who have bought it, I want to thank you so much. The reports and come back on the book have been phenomenal. So I can't tell you that we're going to close out, but what I will do is I will give you the review of the Magnificent Seven stocks, and we will do it in 2 minutes or less. NVDA, where is it of interest to me? It is so far extended, I would not even look at NVDA until it gets a pullback back to in between the 8 and the 20-day moving average, which for NVDA is right in this area here. There was a small breakout about 604. Put an alert about 610. And if it gets back to 610, then I would be checking it out. So that's one of the ways you can do these alerts is put your alert in, let it trigger, send you an email, then you go see if you have a reversal signal. Next, Meta. Can you believe how Meta did today? This is huge. On Meta, identify this gap right here. There's the low, 150, or high, the bottom of the gap there. Here's the top of the gap. Oftentimes, a pullback into the midsection here, the 50% mark, would give an idea of where you could want to get into Meta. I would put an alert at the low of the body of Meta today. If it gets down to there, or even dropping the midsection of today's candle, that's where I put the alert to then go and look in Meta to say, hey, am I ready to buy? And Amazon. Amazon is a slow and steady climber. We actually were in Amazon. We did not have 10% going into earnings, and my rules are if we don't have 10% going in earnings, I exit. Nice gap up again. Same thing. Lows at 167. Put an alert down at about, I'd say 169, and then another alert at approximately 165. That may give you, if it pulls back to that, that may give you an opportunity to get into Amazon. Of all the, I should have saved this one for last, but this is looking really nice. Earnings are behind us on Google or Alphabet. We're getting a bounce off of the trend line. I'll be looking at potentially any type of a little pullback to retest here. It may just break on up from where it's at right now to the low. We're the highs today. I can get that to click in. There we go. So it's moved about 3% or so. And so I'll be looking to try to pick this up somewhere between the 50 and the uptrend line. Microsoft, another one. These are the Power Five, or the Fab Five is what they're trying to call them right now. I don't know if that's good or bad. Not really a great setup after earnings. However, it has broken out And I would look at, a pullback back in between the 8 and the 20. Now we get that. Those were the good. Now we get to the ugly. Okay. Well, maybe this was ugly when I was looking at it earlier today. However, Apple, this is a nice one-day reversal off of a level of support. So Apple may be in play towards the middle third of today's huge candle. Right now, we have a piercing line, which is a bullish reversal signal. And the distance here, it's got about 4.3%. And so Apple is a lot like Amazon in that it's a slow and steady mover. It's, certainly not going to be one of those 5, 10, or 10, 15+% moves. And last but not least, our good old buddy, Tesla. Tesla has come down to the lower level of this downtrending channel. It is putting in a bottom. However, I think Tesla, if we break out of this 180 level on Tesla and the lower portion of the channel, watch out, 152.37, next target down. Breaks that, 118 is the top of the support, 101 is the bottom of the support. Tesla keeps getting the crummy moves that it's getting. Look for, I'll be looking to buy if it gets down here, but make Tesla show us that it's ready to reverse. And right now, it's not showing us that. So, Anil, I think I took over 2 minutes, but it was pretty darn close.
Yeah, that was good. Thank you for the review.
And so, okay. So, hey guys, if you did find value today, please tell your friends. And I got several emails with people who said, hey, I'm sharing your stuff with other people and they're really enjoying it. So I appreciate the heck out of that. If you found today's session valuable and it can and will revolutionize your trading, join our community. Hit the subscribe button and share it with other traders, as we said. So, Anil, a big thank you. I know we went a little bit over, but we didn't have a session last week. And so it's kind of nice to get back into the saddle.
No, thank you. Enjoyed it.
So remember, you are in control of your trading journey, and we're here to provide you some guidance along the way. So trade smart, stay focused, and make 2024 your year of trading triumph. So we'll see you next week. Aloha and God bless everybody. Thanks, Anil.
Thank you.